The largest players in the global long-term debt market are not going to continue buying U.S. long-term debt. To reduce risk, they are bringing their capital closer to home by buying their own and other governments' long-term debt, just not U.S. debt. And this is because what happens in America really doesn't stay in America. Their economy is so big that it accounts for 26% of the world's output. Goldman Sachs thinks that a structural source, asset liability managers, of demand for long-dated government debt is drying up. Yields have now been high enough, long enough for them to lock in these cash flows for years, and so many of them can afford to and are withdrawing from the market. The supply of bonds remains high, fueled by fiscal deficits and central banks shrinking their balance sheets. For decades, trillions of dollars have outflowed from Japan, but the yen carry trade is blowing up. Investors are demanding greater returns for holding government debt, and that pushes up the cost of borrowing. The global price of money, which is set by the U.S. 10-year Treasury, could be about to jump. This is going to weigh on the value of every asset in every investor's portfolio. The Treasury and the Fed are going to step in to cover a lack of demand. Yellen, the previous Treasury Secretary, was buying the 2-year Treasuries, attempting to lower yields. The Fed has bought $43 billion worth of bonds so far in 2025. The Fed is monetizing the debt. We have 3 new things to worry about: a non-funding event as large buyers exit the U.S. long-term bond market, a collapse of U.S. assets in general, and global massive inflation from the Federal Reserve creating more fiat to buy bonds. Thank you for watching Hunting Closer to Home.